Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WEYERHAEUSER CO quarterly report. WEYERHAEUSER Company is a global leader in sustainability, with operations spanning over a century. The company provides a diverse range of businesses and services, including timberland management, owning or controlling approximately 10.4 million acres of timberlands in the U.S. and Canada, wood product manufacturing, one of the largest manufacturers in North America product distribution, offering various wood products to customers worldwide. Climate solutions, providing innovative solutions to address climate change challenges. Real estate, managing a portfolio of properties related to its timberland holdings. Energy and natural resources, exploring opportunities in this sector. These businesses and services contribute to the company's net sales of $7.1 billion in 2024, employing approximately 94,000 people worldwide. The stock price of WEYERHAEUSER CO, WI, has declined by over 25% in the past year due to a weak housing market and its impact on demand and pricing for timber and wood products. The sluggish housing activity, rising interest rates, and decreased consumer confidence have led to lower housing starts and reduced demand for new homes. This has resulted in falling lumber and wood product prices, particularly affecting WEYERHAEUSER's wood products segment. The combination of weaker demand and lower prices has compressed margins, leading to declining earnings before interest, taxes, depreciation and amortization, EBITDA, and negative quarterly financial results. High log inventories and soft domestic log demand have also contributed to the decline in sales realizations. The entire timber and wood products sector is facing fluctuating demand and a depressed environment for wood products demand and pricing. While WEYERHAEUSER has continued its dividend payments and share buybacks, the near-term outlook remains challenging due to these persistent market conditions. Analysts foresee long-term growth potential through strategic initiatives and an eventual housing market recovery, but the company must navigate the current industry headwinds to regain momentum. The primary drivers of revenue growth or decline are largely influenced by market conditions and operational performance. Revenue decline is primarily attributed to a decrease in net sales, lower composite pricing due to supply-demand imbalance, reduced demand from new home construction activity for OSB, and decreased log prices in Western markets. On the other hand, revenue growth is driven by an increase in timberlands net sales due to higher log sales volumes and increased stumpage and pay-as-cut timber sales realizations. Additionally, real estate and ENR net sales have seen a boost from higher average price per acre sold and right-of-way easements and royalty income. The mixed impact on revenue growth or decline is observed in intersegment sales and net sales to unaffiliated customers, which have had both positive and negative effects across different periods. Net income and profit margins. A shift in performance. The financial performance of the company has undergone significant changes over the past year. Net income saw a substantial increase in Q2 2025 compared to Q2 2024, rising by $52 million, 186%. However, on a year-to-date basis, net income decreased by $65 million, minus 21%, in 2025 compared to 2024. Profit margins also experienced fluctuations across different segments. The operating income saw an increase of $45 million, 58%, year-over-year, while the consolidated gross margin decreased by $46 million. Notably, the timberlands segment reported a significant improvement, with a 26% increase in profit margins, whereas the wood products segment witnessed a decline of 83%. The reasons behind these changes are multifaceted. Special items such as non-operating pension costs and interest income have been included in net earnings and adjusted EBITDA. Additionally, gains from the sale of a lumber mill and insurance recoveries negatively impacted net earnings. Conversely, restructuring charges and impairments positively affected net earnings in 2024. Overall, the company's financial performance has been marked by both positive and negative trends, reflecting the complexities of its operations and external factors influencing its results. The company's debt level has undergone significant changes over the past year. While total debt increased from $5,076 million to $5,470 million, a closer look at long-term debt reveals mixed results. Fixed-rate debt decreased by $1,704 million, while variable-rate debt surged by $1,098 million. This shift in debt composition may have contributed to the substantial increase in interest expenses. Interest expenses, net of capitalized interest, skyrocketed by 194% from $69 million in 2024 to $203 million in 2025. This sharp rise is likely due to the increased variable rate debt and potentially higher interest rates. However, it's worth noting that the net charge to earnings decreased by 62% in the third quarter of 2025 compared to the same period in 2024, primarily due to a decrease in other expenses. The company's financial performance varied across different segments and regions. The U.S. business segments, timberlands, and real estate and ENR performed well. In contrast, Asia, particularly Japan and China, experienced poor performance due to economic activity. Regions affected by natural disasters also struggled. Western log markets in Japan saw a decline in total housing starts, while China suspended log imports. The wood products segment suffered significant losses, with a decrease of $83 million in 2025 compared to 2024, and a year-to-date loss of $230 million. Some regions showed mixed performance, such as the South, where sawlog prices increased but declined from the previous quarter. Management is optimistic about the company's outlook and strategy. They expect strong financial and operating performance in the future, driven by growth in emerging carbon credit and carbon capture markets. The company plans to maintain its cash dividend framework and invest $500 million in a new facility, demonstrating confidence in its ability to generate returns for shareholders. The management is also bullish on the U.S. housing construction market, which they believe will be favorable over the medium to long term. They are committed to executing internal plans and strategic initiatives, including restructuring and cost reduction measures, to position the company for future success. Overall, the company's strategy focuses on leveraging its unique strengths in natural climate solutions to drive growth and profitability, while maintaining a commitment to shareholder returns through its dividend framework. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts in recent years, with $454 million distributed in September 2025 and a total of $539 million for the year-to-date 2024. Additionally, the company has also engaged in share repurchases, buying back approximately $150 million worth of shares in September 2025 and a total of 6,694,209 common shares for around $175 million year-to-date 2025. Concerns about inventory buildup and supply chain disruption. There are valid concerns regarding inventory buildup within the industry. Soft end-use demand and steady supply have led to decreased prices for commodity products, page 23, potentially resulting in excess inventory. Furthermore, elevated log inventories and mills carrying them indicate a challenge in navigating the lumber market, page 24. Additionally, an increase in LIFO elimination of intersegment profit in inventory on page 31 suggests that inventory buildup is a pressing issue. These factors collectively point to potential supply chain disruptions due to inventory buildup. That concludes the financial summary for WEYERHAUSER CO. Feel free to comment below, and I will be happy to answer them when possible.